And good afternoon. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Monday, June 7th, 2021. Well, it took all day, but the market did do what I was looking for, and also giving a good shout out boost for it to do, to give it additional support and evidence that the market is now likely back on track to at least complete a solid 5 up, which kind of reverses it and places us more in that the trend is up right now. We're still going to have corrections, but again, remember what I'm looking for now is a larger 5-wave structure up, and waves 1, 3, and 5 are likely to break into their own 5-wave structures or even further breaks inside of them. So it's going to take a while, but it should be a powerful move when all is said and done. So right now, we are getting some nice signals that this is going to be the case. As when I left it off on yesterday for today's trade, I had discussed the possibility that this level that we saw on the opening of Globex could have completed a 3rd wave. I was looking for a 4th wave correction and then a 5th wave sequence up. And that would then complete the first 5-wave sequence. And we're getting exactly that. So it's very nice to see what the market is finally revealing and then following through. So, which gives more credence to the fact that we're out of this corrective phase. And now we're back into what really should be more normalized. And I put quotation marks around that, more normalized corrections, because I wouldn't be looking for the market to fall apart here. I wouldn't be looking for these extended sells. These are just corrections within an ongoing uptrend. So they're going to be different. They're going to be more structured in terms of what we would expect. Okay, so first 5 up, 1, 2, 3, 4 today. And it was typical, you know, we had our little walks and then did nothing, and then it just kind of slid. And that was all great because it did reach support for the move. And that was on the Fibonacci that ran from here to here. And those are just retracements. And so it did come down and did hit support, and that was perfect. And it had a total, the first downside target was 13,700. It dipped below by about, 8 points, I think. It's got down to 92, I believe. Excuse me, 91 and a half. So, and then my second really strong thought is what the market needed to prove its intent by launching off of that level, which it did, but then it stalled and it futzed around and it got really slow, and it got very range bound for several hours mid-morning. And then into the last hour, they picked it up again and then pushed higher. And that was really good to see. But my goal on the whole move would have been at least to see a close above 13,800. And we've closed pretty well above 13,800. And now we're trading upon that in an after hours trade. So I'm feeling very good. Now, what we're going to look for from here is that this is going to come in as a 1, 2. This is likely a 3rd, but you can see it's starting to subdivide again. And that's on the 30-minute chart. And this is what I was referring to. It's like we start to subdivide, and then we're subdividing within the subdivision. And that's just how fast and how quick these moves can build on one another. So let's expect continued upside. That would be my take right now. Small corrections notwithstanding. So the market is going to continue to ebb and flow, but we're looking for the stronger moves now to be to the upside. We're looking for the moving averages to stay in trend and not to start to indicate. I mean, there were periods today that right in here, it was just like a spaghetti factory because it was all up and down and they were all crisscrossed, and it was really difficult to determine what do we do. And to tell you the truth, when you look at it, that's exactly what the market was telling us. Look at this, and then it would do it again and then come down. And it's like, okay, we don't know. And oh, we don't know. And up and down, but it varied in a range. And sometimes the range was real apparent, and other times the range was like, okay, what are you going to do now? And so it was tradable, but better left untouched, sort of. but that should continue in terms of that it's going to happen again. But we'll recognize it because this whole thing was a little wave 2. And then wave 3 started and it put in a little wave 2. And then 3, 4, 5. So wave 3 could be finishing up here. We get a 4th wave correction, which likely will come back down into here. And then we launch in the 5th to complete this first sequence, right? From there. 1, 2, 3, 4, and then we're getting the 5. So my expectations right now is that it should reach up towards this level. So all the new highs could complete it, and then we're looking for a little pullback and then additional new highs from the sequence, okay, to follow through and bring this on up to 13,875-ish. It could go beyond it, depends on the power of the market. But then the next level above that would be 13,971. And remember, ultimately, before all is said and done, and we got a lot more room to go, I am looking for this thing to break back above 14,000. And I believe all these moves could be brief in terms of they're not going to take months. This all could unfold because there's a lot of negative hanging over the market. So why they're doing it, who knows? And at this moment, I will continue to look for new highs. So actually above 14,000, but then above 14,064. So we have numbers that take us quite high. We can go all the way up to 14,286. That's where wave 5. So that, remember, this is a minor wave 5, would be equal in length to minor wave 3. And that would be pretty much, that would be the extent of where I think it should go. So, but that's enough room. Yeah, good. 400 points from here. And it would be a great rally. Anyway, more near term. So just to kind of refresh, I'm going to go back out to that hourly chart and I'll show you where I put these current retracements. So I've used retracements and I've gone down to the bottom where, we're in the 3rd wave, and it's related to wave 1 right now. We're in 3 of 5. So from where wave 1 started, 12,915 up to the high at 3,700, I think it is 13,700, right in there, just below, and then down to the bottom of the small minute wave 2, which just occurred at 13,462. That gives you the upside. All of that goodies. And I'm not really looking beyond that, but the fibs are there. So we've got our marching orders should this market really get crazy and really take something as super bullish. And let's go auto there. And that's going to be it for today. I'm going to continue just to stress that we use moving averages, and these moving averages are important to learn about and to follow. Let me just go over to some different charting. This is actually the hourly chart, but you can see even starting on the hourly that the moving averages are all in alignment. And even down, I'm going to take it down. Now looking at a 2-minute chart, which is a big difference, but they're all in alignment. And here again, they're all in alignment. And that's important because the market continues to signal we're going higher. And that's good to see because it follows through with the strategy and it follows through the analysis that's being presented. But that can change. You know, when the market starts to break below here, you do kind of step back, you caution, and look at what type of a little correction could it be, et cetera, et cetera. These are all things that are going to be done in the trade room as well, folks. So I'm going to leave it there. And the next update will be tomorrow, Tuesday, June 8th.